And now, as uncertainty continues to mount over general elections and global economic unrest, foreign investment outflow on the Nigerian Exchange Limited increased to 122.97 billion naira in the first half of this year, representing an increase of 5.4% from 116.72 billion naira reported in the first half of the year 2021. According to the recently released 2022 Media Outlook report from the Nigerian Exchange Group, foreign portfolio investors have largely exited Nigeria due to issues with foreign exchange liquidity, which has led to backlog of delayed external payments. The report also stated that there is no better reflection of this than in the record of FDI flows to Nigeria, which dropped from over $4 billion in 2015 to just about a mere $600 million in 2021. Now, the NGX reports further notes that both foreign and domestic investors have also transacted 1.66 trillion naira in the stock market this year, a significant increase of 60.7% from the 1.03 trillion naira which was recorded in the first half of the year 2021. Well, joining me now to discuss this and much more, I have Mr. Tajuddin Olayinka, a stockbroker and an investment banker. Thank you very much for joining us on the show today.
Thank you for having me. Good afternoon.
Now, let's start off our conversation really now with the performance in terms of investment flow we've seen within the Nigerian Exchange Limited. This has increased to 22.97 billion naira just within the first half of this year. That's quite an impressive front, wouldn't you say?
Well, it's something that has been on since the time of global lockdown. When we had the pandemic and investors had to already sell off especially foreign portfolio investors had to already sell off their holdings in Nigeria securities, and then of course wanted to exit Nigeria with available dollars. But that was difficult for them at that time, and so it's that problem that we had then that is still on at this time. So because many of them are not able to exit the market, in dollar terms. They were able to exit the market in naira terms, but not able to exit in dollar terms because they were the same way we had lockdown for everybody's movement. They also had lockdown for dollar movement. So they were not able to actually exit Nigeria in real time. So that disturbed further inflow to the market, and I think it's that same situation we have today because CBN was not able to meet that that surge in demand for FX at that time.
And still talking about this foreign exchange liquidity and how this also affected investors looking to move out of the country. Now, in terms of delayed external payments as well, how much of a base does this now create for local participation within the NGX trading and transactions?
Well, local participation, has always been there. The only thing was just that because of the foreign portfolio investors' participation, and the resultant volatility, the usual way they come into the market and exit market, created so much volatility that actually discouraged local investors from participating in the market at that time. But now that we have some semblance of stability due to the absence of these foreign portfolio investors, local investors actually taking positions and replacing the exit of these, foreign portfolio investors. Well, it's good, only that there's no way you will not need foreign portfolio investors because if you don't have them, you also have a challenge with your foreign exchange management, and so that is the issue Nigeria is struggling to grapple with. It's a difficult time for us, really, and I think we only just have to encourage local investors to continue to fill the gap so that we have a better market in Nigeria. But so far, so good. I think local investors have actually done very well, particularly local institutional investors, the CFAs, the asset management companies, and all those stuff. They have actually done well. They're actually the ones driving the market. And that's why you see, semblance of stability and resilience in that market. So it's a good development for the market that local investors have the capacity to fill that gap because they have always been there anyway.
And in terms of stability in the market as well now, to what extent do you think this would also filter into the second half of this year?
Like I used to say, if you recall that the last time I had the opportunity to be part of your program, I said it then that the Nigerian market has that resilience. No matter no matter from which perspective you look at it, either from the perspective of the disturbances in the political space, or with disturbances or usual movement in the economic space, the market still has that capacity to turn things around, to behave in the normal way. So I want to say that barring unusual behavior from politicians and political actors, I want to believe that we should have a robust market because of the fact that the economy is still awards its liquidity. So much money is still moving around, and those money must be invested. And so market is there to absorb that liquidity, and for that reason, I expect to see a robust equity market in the second half. More so that even the activities in the fixed income space is not really threatening. It's not as threatening as many investors at the entry stage. And so, for that reason, I expect to see a very robust equity market in the second half and more improvement in yields and across board.
And then let's now talk about new listings that we should expect in the on the NGX. Now, let's talk about that. New players, new listings. What's your expectation for the second half of this year?
Well, listing is still not, it's not as encouraging as we used to have it in the past. This is so because companies generally want to list if they know that they can raise new money. You don't list your shares or your security in an exchange when you're not sure that can produce a good result for you in terms of you being able to raise new capital and drive growth in your company. So the market will still have to push up a little, get to a point where security prices are at levels where where board of companies can approve capital raising for those companies, especially more so that we still have some existing some shares. Let me put this way: we still have share prices of some very good companies that are really doing well, trading below their book value. So once you have that kind of situation, you don't have a board of a company approving capital raising as well as issuing new shares. So those are the things that we still have to manage and put right in the market before we can see more listing in that market. But of course, we will see the same companies that are not already listed trying to come in and take position. Being part of the market by way of listing by introduction, or maybe they're also trying to float an IPO. But at this time, we really don't see. I don't expect so much of IPOs, but I expect to see maybe listing of the bonus shares or listing by right, because the market is still not right for new listing in terms of companies being able to raise money or sell their shares at prices above their book values.
And now let's also talk about the resilience that we've seen the Nigerian Exchange also show over the years. Now, with this new state as a limited liability company, now let's also talk about the fact that we are going to see a stronger pull in terms of beyond just the banking stocks. Now, there are also some new movements that we are gradually seeing within insurance. What's your take as well on the consumer goods segment of the market and also just the commodities market as well? Gold still remains one of the biggest commodities that we're dealing with today.
Okay. I think generally we continue to see movement because consumer goods haven't really moved so much in recent days. But I expect to see some kind of uptick here, given the fact that, consumer goods have, the companies involved in this sector have capacity to from time to time adjust to inflation. And because investors are actually looking for opportunities in companies that have capacity to adjust to short-run, short-run adjustments, and inflation. So they probably would be showing interest in that sector. So I expect to see more movement in that consumer goods sector. Banking sector hasn't done well in fact, let me put it in the last one quarter. they haven't done well because the market has also not been able to price the risk involved in that sector, appropriately. There seems to be so much sentiment, so much held down sentiment on that sector, and so I also expect some kind of minor recovery in the short term and major recovery in the long term in that particular sector, because whatever happens to interest rates benefit the banks. And if interest rates is expected to go up, especially within the confine of money market, I expect to see improved performance, from that banking sector. So with that, we also expect to see some appreciable movement in prices of stocks in that sector. That will be happening because the prices are extremely low, especially for liquid banking stocks like Zenith, GTCO, Access Corporation, quite a large number of them. All of them, SDN, including even SDN. And because we saw what SDN did, in last quarter in terms of recovery, debt recovery and all those things that actually solve their capital and improve their earnings. So all those things, I expect to see them happen again, in this second half, and of course, as we progress in the year. So clearly, I still expect to see a more robust market generally, in the market, as we progress in the course of the year.
Well, we cannot also ignore the role of the telecom sector as well. This is one of the sectors that is also sustaining the Ghana Stock Exchange and other exchanges across the African continent. What do you think is also going to be some of the intricacies we'll see within the second half of this year, especially with this back and forth we are having with government in terms of the kickback on phone tax, increment in phone tax, and then data?
Well, I think government is trying to take advantage of that. Telecom sector has actually become the source of investors generally, and even consumers. Those of us who use telephone or use data services from telecom companies will not, no matter what government does to that sector, there seems to be some kind of close to how do I put it? I see a situation where no matter the pressure from government in terms of taxing that sector or taxing consumption in that sector, investors will still continue to show interest. So also the consumers are going to buy those important data and airtime. So it's even more so that we are in the political season. I don't expect that to actually impact negatively on that sector. We have an inelastic demand in that area. Not totally inelastic, but close to being inelastic. So for that reason, I think that sector is going to do well in spite of what government is doing. But if we get to a point where consumers, those people who make use of airtime or data will then begin to adjust. But clearly, if you only affect, they will continue to pay attention to that sector and benefit from it by way of buying data and buying airtime. But eventually, it will affect other sectors, where they actually need to spend money. So it's not really a threat for that sector, the way I see it.
Okay, lastly, let's look at the leadership of Oscar Oyema and some of the new initiatives we have seen come to bear under his leadership, as we are also projecting for the last half of the year. What do you think? What new expectations do you have to come under his belt?
Can you come again? I didn't get that.
Yes, we're talking about the leadership of Oscar Oyema at this point in time now. What new initiatives do you think would also come under his belt?
Leadership of what?
Oscar Oyema.
Okay. I thought we were talking about that. Okay, yeah. Oscar is an experienced person. He's been around for quite some time. He has spent his full terms of the 5 years, making it all together about 10 years. And so, Oscar has been a good leader in that market. He has been a friend and brother also, and I see his role in that market has been very positive. And of course, with the structure we now have, I think after some time, I will also expect Oscar to shift base and possibly, allow more. Because for me, I think having Oscar there and having all these other directors, especially having a subsidiary like Exchange Limited that is actually, taking care of the earnings prospect of the exchange, will require that after some time, maybe Oscar will also may consider, coming up with a lean structure in that place. So that again is not a problem, because I see Oscar either in other part of the thing or out of the thing as something positive. It's a very dynamic leader.
Definitely remains a dynamic leader. Thank you so much for your time on the show today. It's been a pleasure speaking with you, Mr. Tajuddin Olayinka. We've been speaking with an investment banker and stockbroker. Thank you once again for your time this afternoon.